Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Joel Elconin, co-host of the Benzinga Pre-Market Prep Show, also editor of the Pre-Market Prep website, which will be linked below. Now, Joel, look, we've had a pretty decent rally in a lot of different sectors over the last about 2 weeks here, and a lot of that has been, I think, predicated on a bit more weaker economic data out of the US and around the world, as well as lower inflation, again, out of the US, but also around the world. The theme of bad news is good news when it comes to a weaker economic data, but in all fairness, lower inflation is also good too. So it's kind of following, I think, more what the central banks want, and that's gotten investors saying there will be no more rate hikes, especially through this year, and starting to price in rate hikes for next year as early as kind of the later half of the first half of next year. Joel, your general comments here. How sustainable do you think this rally is, this rebound that we've seen in the broad markets?
Good afternoon, gentlemen. Thanks for having me. A little 2 week hiatus. I mean, it's sustainable. I mean, just the fact that, you had the huge rally on Tuesday, lost a little bit on Wednesday, gained it back on Thursday. And even with some of your big stocks down here today, notably Microsoft, but that's had a big run. The market's still hanging in there, and I think it's the inflation data. Really, obviously, we came off the lows of the move, got the benign inflation data. Everyone's happy. We cleared Q3 earnings season, good inflation data. Now nothing's really seemed to rock the boat. So looks like we're just pausing here. It's hard to believe we haven't given anything, really hardly anything back from Tuesday. So just based on the stability of the market and not giving it back, it just looks like you're forming another base here. Of course, things can change instantly, but really remarkable couple weeks of the markets.
Yeah, Joel, it's been nice to see the lift the last couple of weeks, and things were getting kind of dismal, and maybe the sentiment had just gotten too bearish in September and October, which is usually a seasonally weak period. But it's really bounced back with a vengeance since the end of October. Some of that is the concerns about the Fed hikes being off the table, and some of it was just an oversold bounce, probably. But when you look at the market breadth, one thing that we've noted is it's improved a little bit at the bottom. Some of the small caps, some of the Russell stocks, some of the tech growth stocks, they even rallied. What do you make of the market breadth improving?
It's a leader to laggards rotation going on. Of course, you have your undisputed leaders in Apple and Microsoft, Google, Amazon, Nvidia, and Meta. They're part of the rally, but you're seeing some rotation into some of the small caps. I mean, if you look at the IWM, I mean, the monthly support on this thing is just absolutely crazy, going back to levels that you saw in mid 2022, and you finally were able to distance yourself from it. It's just a case, you had some stocks like Walmart, they didn't deserve to get tarred and feathered off that report. That wasn't that bad. But, we could go into more on that in a second. But, when there's rotation in the markets and they start, scooping up the laggards, it's, sometimes it's a bad sign. But the way this market's been acting, it's hardly given any bad signs at all.
What about what we've seen in the energy sector, more specifically oil? Natural gas has now dropped below $3, but oil's been on a volatile ride, and today's a good day for oil, but it, in a way, kind of broke down this week as well as last week in different degrees. So, does that actually further help these markets because the oil price is going lower?
Yeah, I mean, look at the inflation data that we got, and who knows when those prices are actually calculated, where the crude prices are calculated in. But that kind of goes to the argument, though, a little bit more of like potential recession. People are not going to be needing as much oil, but it built a big war premium in there, right? It got a big boost off that. We all know what OPEC's been doing behind the scenes, so it's another positive catalyst for the market to see oil coming down, because that affects a lot of different industries, and no more than the airlines industry. You see Delta Airlines making a nice move off its low, so it really it flows down to the consumer in a lot of different ways. So we'll be looking forward to the next round of numbers with the inflation data.
Yeah, Joel, it does help the inflation side of things, and it also speaks to that goal that the Fed had of slowing down demand. It could lead
Hmm.
to some contraction concerns, but when you bring up the consumer, let's circle this back to Walmart that you brought up a minute ago. They had that 8% fall on Thursday, and it was because the CEO came out on one of the conference calls and said he was concerned about the next 90 days, the consumer spending, as far as his outlook moving forward. And so people kind of overreacted to that. Are you concerned at all that we may see some weakness in retail, though, in the fourth quarter? Because now people are looking at that. That's usually a big consumer season, the fourth quarter. And it seems like a couple companies have hinted that maybe things are not going to be as robust as people were hoping for.
Retail is such a mixed bag. You know, it's look at Gap stores today, right? Trading up 30%, up $4.22. You talk about a laggard. There's a laggard. And then this is more alludes to more to the leader laggard kind of thing, like Walmart just sitting up there near old time highs, right? And they decided to take some profit taking. It just look at Target too. Another example of the leaders laggards picking up. Look at Target, what it did off its report. So I think the consumer is going to hang in there through the holidays. I guess it would be more what happens, and people find money to spend for the holidays. We'll see, how things get into the first and second and quarter and next year. But look at what Macy's did. I mean, it's such a mixed bag with the retail, but doesn't seem like the consumer. It doesn't seem like the consumer's maxed out yet on those credit cards. They're still not willing to spend.
Yeah, we'll see how the data keeps coming in, but I know a lot of people have been watching that consumer just in the sense of, well, that they've been holding up a lot of that recent economic data throughout this year. Joel, big picture, looking at these markets, since it has been a nice rebound after about a couple months of downward pressure, it has people looking at potentially testing those all-time highs from the very tail end of 2021. Is that in the cards in your eyes?
Man, oh man, oh man. I mean, it's hard not to say that that is something to be on the radar here. Obviously, there's going to be some bumps in the road along the way, but right now you can't argue with the price action, and if you are, then you're losing money. So it's just such a like in the S&P, yeah, that may happen. In the IWM, no, I don't think that's going to happen. But it's a bifurcated market. There's the Qs, yeah, maybe the Qs are not that far away. So for the Qs and the S&Ps, I'd say it's on the radar. For the IWM, it's going to take a while. It's going to take a while even to get back to 200 for the small caps. So the have and the have-nots in the market, and S&P and the Qs are the haves, and looks like the small caps trying to play catch up. But man, even when they do have a good day, they stumble too. So that's my look at the markets.
Well, and Joel, one other laggard sector that got a little love over the last couple of weeks was the real estate sector. And it had been, the home builders were doing good, but a lot of other parts, the REITs and some of the other areas of real estate were getting schnockered. And then all of a sudden, the rates come down and it becomes more attractive for buying. You see mortgage rates going down, you see borrowing rates coming down as the rates pulled back some. And a real estate sector got a boost. Do you think that's playing into some of this new outlook on the interest rate environment?
Yeah, I definitely think so. And then once again, I just think it alludes to the to the laggard trade. What can we buy that hasn't already gone? So maybe it's not as important to have rates starting to go down, but at least have rates steady. So these institutions can look at their balance sheets and normalize things a little bit. So yeah, rates said, the bonds, we call it the Ackman bottom. He shorted the bonds and he was darned when he covered. That was really very close to the low of the move. So bond market's cooperating, and the stocks are, not on a step by step basis, but the utilities and the real estate. I mean, if you want to look at stuff that's been beat up and on the rebound, but not near all time highs, there's a couple sectors to take a look at.
So since rates are brought up here, I think one of the biggest potential catalysts for these markets is quite simply the rotation of money out of money market funds. If rates maybe move down a little bit more, just how much of a boost could markets and maybe every sector get here, Joel, if, as you said, rates stay stable, maybe they drop a little bit, and people say, well, enough of in this safe stuff, let's go aggressive with all this cash that I have on the sidelines.
Oh, definitely a major catalyst. And people were saying that even before. I think a lot of people are underinvested, and then what they're invested in, I think, is some of the wrong things. You just have people that got caught up in that ape mania, 2000, the pandemic, 2020, 2021. Hey, how easy is investing? And a lot of those people are not back to where they were. But there is a lot of cash on the sidelines, and I think the institutions are underinvested as well. So that's just going to make the pullbacks, even more shallow as they scramble. Not only the retail and the individual investor, but the institutional investors that are underperforming the market. They're going to have to put some of that money to work.
Yeah, it's almost that chasing of higher prices that can happen, but who knows? We'll see where this all goes because it has been just a couple week rebound, but it's been quite strong and it has spread out a little bit, even though, look, there is still clearly some leadership here. Man, we'll see how the end of this year works out. Santa Claus rally, who knows? Maybe some better data, who knows? But at least right now, boy oh boy, it has been a pretty strong year for a lot of different sectors and the broad averages. Joel, thank you very much for your time. We'll probably skip next week, but we'll have you back on in a couple weeks. I hope you have a great weekend.
Okay. All right. Sounds good.